Today, Yudhman, today I am trying to analyze this BlueJet Healthcare Limited stock. And before going into that, I want to explain about what actually the BlueJet Healthcare do. It was incorporated in the year 1968. It is a pharmaceutical company and healthcare related company. And the key so these are the details you can see on the screen. The product portfolio and the contracts with the industry, high-end testing, sweetness and all, pharma intermediates and APIs. What is the percentage of revenue it getting generated by business pharma and intermediate APIs? 13% of the revenue got generated in the financial year 2024. So there are the manufacturing facilities, and we have Shahad, Ambernath, Mahad. The company supplies to the largest global manufacturers of contacts, GE Healthcare. These are the companies from this, these are the clients. And so what is in GMFs? It is covering 11%. In India, it is doing 13% of the in US 4%. There is no much exposure to US. The point needs to be noted in this current scenario of economic dynamics which is happening now. And the rest of the world is 4%. So it is doing business in more than 39 countries and 400 plus customers. In its pipeline. So really focus on advanced process and research. And these are the things. This is a brief introduction of the company and all. And when we go into technicals and all, so it has a market capitalization of 11,223 crore market capitalizations there. And stock PE, it is like around 31.3 current PE of it. And when you see the industry PE, it's in 32.9, slightly below the industry PE it is trading. And so price to earning ratio of 31.3. This is an important metrics. Other metric which we need to keep in mind is price to book value. It is like trading above, it's 9.90 times. The share is trading around 9.9 times. So the book value is 65.3. Return on equity is 32%. Debt on equity is 0.02. So it has low debt. This is like the company's pretty much doesn't have that much of debt. Earning per share is 20.7 and interest coverage is 632. Pretty much robust. And this is a technical chart. So 1 month, let me take this for 1 month to see how it is like price. So this is the peak. So this month 6677.80. This is in October, started 10th. And from that to now it is trading around 647.80. And when you see, so let me do this. So pretty much down. So the and if you like so what is the pros? Company is almost debt free. As already said, it's a debt free company, and so company expected a good quarter. Company has good return on equity. Track record 3 years ROE is consolidated as 26.83. Average ROE, I can say like that. The main thing which is now bothering us is costs. Stock is trading around 9.90 times its book value. So this is the only concern as of now, but we have it. And coming to the peer comparison, you can see I can say it's not a fair comparison because this when you see this market values from this Sun Pharma, Cipla, Tonal Pharma, that this Mankind, Iris Lab, all these things. Like you can see this the market capitalization of these companies. Where around these companies. So you can call it as a mid cap or small cap company. So when you see the PE ratios of all this, it was decent, but still we have like companies which are trading below the PE of this company. So, and sales you can see, let me come down and show quarterly results. So what are the sales happening? So when you see from June 2022 to June 2025, you can see the reasonable amount of sales happened. So that pretty much growing year on year, and expenses are also growing in the same pace. And the one thing we need to check is what is happening before tax. Net profit before tax is 123. How much percentage it is given? 26%. And the net profit, you'll see last quarter to this quarter there is a decline in net profit. Many points need to be noted. And its consistency up to this last quarter, March 2025. But this quarter, June 2025, the results we got 91 crores of profit. And when we go to the balance sheet, total assets, total liabilities, and obviously we can check your cash flows. And the cash flows are not very much robust, and the cash conveyance cycles also little above the industry standards and all from which it is trading. And another point of concern is the promoter, and the promoter has decreased his share. And this is because of I will tell you later like on this video. So these are the pretty much the basic metrics which we are saying now. The same thing I use for let me tell you the power of perplexity. So I'm going to set. So Let me go to the cluster. Cash flows. Please do it. Here is a summary. Let me drag this one down. Let's see the cash flow for operation. Trend operating cash flows were steady and spiked considerably in 241 and declined sharply in 224, showing a strong improvement in operational profitability within capital management. Key points of concern due to higher receivables, lower sales, and operating expenses. Trend with the large increase of inflows, outflows, and dividend strong and likely in capacity expansion, expanding, putting that amounted from financial activity. See, we have three categories here. One is cash flow for operating activities. So this is analysis of this, the numbers and the strong improvement. But there is a decline in March 2025, keep on concerned. That is one thing. And investment activity. So cash from investment activity will happen. Surge in investing workflows. Consistent and negative with large increase in outflows, indicating strong investment in the bank, to store some expansions in the state of Andhra Pradesh. The surge in investment outflows may be linked. So this is an analysis to surges in investment. So the third point is the cash flow from financing activities. What is an analysis of it? The company is almost debt free, as seen from debt equity ratio, interest expenses data, likely to dividend payouts on minor debt. So net cash flow negative in last 3 fiscal periods. Analysis is like the negative net cash flow is simply due to high investment and quick drop in operational cash flow. Key observations. These are the key observations. The complete acquisition very low, almost free, yet the cash flow turning into in the last 3 years. Continuous. It is not accepted. Conclusion. Blue Jet Healthcare demonstrates solid operation because the years profits are to cash. Substance of capital must be especially announced further. And let me give another prompt. Let us see. As we said, it is doing expansion here. The company has acquired 1.48-acre parcel of industrial land around the Lead Cluster Phase 2 and the Kapalli district and the Paste Junction around the Paste district infrastructure corporation limited APIIC said new construction will be part of the long-term first. Initial phase. The first phase of the expected to do remain in Maharashtra, but the large-scale expansion project is happening in Andhra Pradesh. It is happening in Andhra Pradesh. So, because of this negative characters there. Let me go to another website to analyze little more and want to see what is the price first. Still it is like hovering around 646.90, and when I see the delivery, so yesterday, so when I see it, the overall delivery or the delivery for particular dates and all, daily delivery dates, right? You see pretty much decent delivery date, 54.4% and 29, 28 is 53%, 59% on 27th October. People are holding the stock. It's not dumping, they are just using it, dumping it. They are trying to invest in the long term, not. So let me go to the monthly chart also and see what is the delivery percentage. Pretty much it's above 50% in most of the cases. So pretty much decent. And when I go for the technical stuff, so so 1 year it has given more than 30% returns, like 35.0. Pretty much it you can see it's 3 months or 6 months return. You see it, the negative return. Okay. And I go to the levels like, so what is the P2 high, what is the term high, and all those things like the stock route the high when you see it. So what yesterday it is the high top right. 52 high. So 21st July only. Let me go to this. So 59 to peak 29,723. December for 15 week is 735. So what is 7? 24 because day low 54 is 31st October 2024 last year in the same October month. The 31st October it was like around 463.730. Pretty much very low at the time. All-time low also that is 2023. And let me go to the indicators also and see what is MACD is doing here. So when I go to the MACD, moving average is convergence. It is around minus 12.62, negative only. There is no positive signals here. So what I do this, like, let me go to this, what I do this, perplexity as perplexity. As I said, with moving averages, which will tell you when to enter, when to exit and all. When I say the moving average, but 20 days and when it's 58, 50 days is 687, and these two things are very important because when a stock price break this barrier of 658 here 20 days or 50 days, and then it will like gain the momentum, and it will like skyrocket from there, mostly because the investors will get confidence on that stock and will try to buy it. And before going to that, let me go to this 10-day MACD values, like what is happening. Historical data. I want to check that MACD values will do check limited real market data for the past 10 days, 10 trading days. So here, when I see this pattern, so I can see that MACD is somewhat decreasing in the sense that there is something in the stock. It's continuously decreasing with MACD value, and the investors are getting some sort of confidence in the stock, and it's being recorded in MACD like so minus 12.62, slowing. It's nearing to zero. And connect to the fundamentals in the order. As I said, that it's a market capitalization of 11 crore 230. 11,230 crores. The ratio industry P to is lower than the industry P. This is a good sign. Earning per share is 30.67. Book value is a little bit high. Book value, price to book value, face value is 2. Coming to the results and all, we go to the results and show you what is happening in the results and all. Net sales, okay, fine, getting improved. Expenditures and all, depreciation and all. What is the EBITDA? EBITDA, you see here. So it got declined, not much, but the slight EBITDA declines there. And we go to the profit and all. So there this all those expenses and all this load in the final profit is a little decrease. Net profit. So and coming to the ratios and all. Point keep to be noted. Return on activity. Okay, it's showing some 30%. Return on capital employed is 41%. Return on assets also getting improved, 21.22%. And efficiency ratio, when you check, is profit after tax margin getting improved. Till I'm taking this 2025 to 03, not the present quarter. It happened 2 quarters, right? After 2025 was like it is having the good decent numbers here. Working capital also not that much, and inventory also. Number of days it is holding reasonable, not that much. it is standard, industry standard company. Growth ratios, let's say this is there. Put for 5 years, it was good. Net profit growth is percentage is good, EPS is good. Solvency ratio, total debt to equity ratio is very low. And interest coverage ratio, it is showing high. It's a good sign. And the current ratio is like EDT center 2.57. And quick ratio. So let's check this. What is the significance of it? The higher the current ratio, the more capital the company is taking obligations and all. Value under indicates that the company may be able to secure the money, etc. It indicates that the company may be unable to pay off the obligations if they can do at that point. But pretty much it's having pretty much decent value here, the ratios and all. So the last one, cash flows up to last year was good. Free cash flow, I told you that because of expansion, but free cash flow was nothing. P ratio, price to book value ratio, pretty much okay. And see for shareholding, shares which are getting priced. No, we will take that. And so if it's pretty much decent, I take it little slightly different. DIS, they have increased in stake in this, which is okay. And let me check the important ratio. So this PEG ratio of it. So each ratio is between 0.85 and 1.03. Okay, pretty much okay. That it should not be greater than 1. Lower PG suggests earning growth should be greater than the current valuation. And I have calculated the PG ratio based on the EPS, future EPS, also projected EPS. Calculation is pretty much good. Using this is the formula which got based on the future EPS, and the forward P and all to getting calculated based on that. The current price is 856.25. Maybe 3 years average. Continue this. Feasible continue 3 years average 91 annually. So this is the forecast price. Then we calculate the PE ratio. This is the forecasted PE ratio of the stock, and this is the forecasted EPS of that stock. value divide that. This is the formula which we got, 50.80. And using the growth rate, P is the growth. EPS growth rate is around 19.19% annually when we calculate it. So 20.14, which indicates a relatively high valuation of our business. But it's reasonable. And the debt to equity ratio is very low. Total debt is in shareholders' equity 7.3 billion. Interest coverage ratio is also good. EPS ratio, PB ratio is a little bit high. PE ratio is reasonable. The debt to equity is a little bit low. It's a zero, you can say it like. Promoter opening is good. Total price is 0%. Reasonable. So this is an overall analysis. Blues with healthcare demand strong financial healthcare demonstrated 0.2 best trades at premium valuation to its growth trajectory. This is an analysis. I'm not suggesting it. I'm not semi-registered analyst. This is for only educational purpose. And why it is falling? Robust fundamentals there, everything is set. But why it is falling? And these are the reasons: high valuation, unless recently disputes its fair valuation due to moderate revenue growth, financial year 2026. Even after correction, the stock forward which is reject premium to Q1 results. July 2020 shares dropped and the stock company reported 70% decline. I already showed you that expenses recently year on growth. Promoter recently sold some of the shares, mainly September 2024. Promoter share announced a wide restriction about 5.9 million share, causing temporary supply overhang, 4% decline. Although zero print share such a workers activity depends short-term price momentum. Then short-term stock has been consistently trading below 2050 to 2028. Moving averages are already told you that dividends dropped that last September. It's September 23 traded as it index now. Somewhat people are noticing the retail investors and all because you can see the delivery percentage. Daily delivery percentage chart showed you right. It is like 50% more than 50% before that stocks are down. So overall analysis of Blue Jet Health still retains strong fundamentals. ROI is 27%, debt on equity is 0.02, profit growth forecast 12.5%, NA per share. Near-term stock movements are more fit to structural valuation. price fall in the short term because I look for a more extended time. So this is your stockist Mr. Signing off.